Portfolio manager at JPMorgan's multi-asset solutions. Wow. I mean, day two of big jumps. This after a very dramatic weekend of bombs being dropped by the U.S. We have a tentative ceasefire at the moment. Are you surprised at what equities have done the past 48 hours?
Sure. I mean, these moves have been nothing short than remarkable, not just in the last 48 hours, Liz, but, I just looked at this before we came on. We're now up 22% from the April 8th low, right? Who would have ever guessed that? And I think let's talk about why this is happening. Markets hate uncertainty, and we're moving from uncertainty to, I think, things that are more certain. So what are those things? The impact that tariffs are going to have on growth and inflation. So we believe maybe inflation goes up by 30 basis points. That clip you mentioned with Jerome Powell, say if we have a sustained move in inflation higher, then we're going to be in a tough spot. But they didn't say that last week. Last week they said we're going to see a little bump up in inflation. It's going to be temporary, and then it's going to come back down. And if growth slips, we're going to be there with 2 rate cuts this year. They said that last week. The second piece of uncertainty for us was geopolitics. This is what you're referring to over the last 48 hours. And it's not just geopolitics, Liz, but it's the effect that geopolitics have on oil, which you just pointed out. Mm-hmm. So about 5 years ago, the U.S. went from a net importer of oil and liquid natural gas to a net exporter of liquid natural gas, and the energy independence story looks so different from what it looked like 5 years ago for the U.S.
You hear President Trump yesterday say, oh, by the way, China, you should be buying oil and gas from us. We'd be happy to sell it to you.
Do you realize we're the largest liquid natural gas exporter in the world? We just passed Qatar on that. And when you talk about the Strait of Hormuz, I wanted to mention that as well. China is the biggest recipient of oil from the Strait of Hormuz. So to us, that means that the probability of that strait closing, which was such a big fear over the last 2 days, probability of that just goes down. Again, never assign a 0 probability to any event, but the uncertainty around the tariff impact, particularly on inflation, the Fed's ability to cut rates in the face of what could be rising inflation, and the geopolitical story and the ceasefire are all leading to this.
When our viewers look at the ticker and they see all of this green on the screen, what I think is absolutely fascinating is a month ago and 2 months ago, consumer confidence really started to shiver. And today we got consumer confidence, again, rear view mirror looking for May, and it missed. So it came in at 93. The expectation was for 100. Normally that would send the market into an absolute tailspin, right? But this time, no. Is this rear view mirror looking? Do you throw this one out?
Yeah, and Liz, people have gotten fooled by dealing with soft data. What are the consumer confidence measures? Remember, Michigan confidence a couple of months ago looked like a disaster. I just said in the last 2 months, the S&P's up over 20%. So a lot of this, I think, is rear view mirror stuff. The hard data that matters for us, growth, inflation, and labor markets. And Liz, this is a consumer that's going to continue to stay resilient. Do you realize this is the lowest average gas price this summer than we've had since 2021? Average gas price around $3.20. Labor market still continues to be strong. And at the end of the day, financial conditions supportive. The 10-year note just broke through 430. Like, you're getting a lot of these worries that are now becoming more lower probability.
Right. So we've gone from April escalation to de-escalation, at least in this moment, which is certainly welcome. So, Phil, I noticed that you talk about now the Mag 6, not the Mag 7. Who are you eliminating here when you talk about the best buys here?
Yeah, so we're removing Tesla from that. So it doesn't mean that Tesla's not a good buy. We're just focused on the Mag 6 PEs. So what do we mean by that? There's still upside there. Do you realize we came into this year, those 6 companies were trading at a 30 times PE. They're now trading at 26 times. So there's still a 4-handle difference between where they were coming into this year versus where they are now. So when you say, okay, are these stocks expensive? Even after the rally, we continue to see upside potential that we think can carry the S&P.
Okay, forward PE for advanced micro devices, which is the big winner on the NASDAQ 100 today, is about, what did I just say, 35. So normally people might think that's rich. Today, AMD was raised to a buy from a hold by Melius Research. That lifted the entire sector here, and the SOX is the top sector leader at the moment when it comes to the actual numbers that you look at. I mean, you've got NVIDIA, Qualcomm, Texas Instruments, Intel up 6.7% on no news.
And you know what the part of this is too? The $7 trillion sitting in money market funds, 1, and 2, Everyone de-risked in April and have been chasing this market. Goldman Sachs has a great positioning indicator that shows that we're still one standard deviation below normal levels of equities right now. People are chasing this market, Liz.
Okay, that's not necessarily a great thing, as history tells us, but quickly, are investors poised for a risk-on portfolio, or are they a little behind?
They're not poised for a risk-on portfolio. We think that they're behind here. We're positioning portfolios overweight risk, but we don't think investors are positioned for this rally and could be chasing it through the summer.
Phil, great to see you.
Great to see you.
It's been a while since I've seen you this jacked up.
Excited,
I like that.
yeah.
I mean, listen, it is a very strong day, folks.